Hi, it's David Worrell, your DIY CFO, and man, do we have a lot to go over to unpack the brand new stimulus legislation that created a second round of PPP loans. So put on your seatbelts. I'm going to go through this pretty quickly. It's in three categories, okay? I want to bring you up to date on current PPP forgiveness applications. I want to tell you how the new rules impact your old PPP, and I want to tell you the outline for exactly what we know about getting a new PPP, a second round of PPPs, which are available starting soon, we hope. So let's get going. So the PPP forgiveness application that you might already be started on, man, I'm back to telling you, please put on the brakes a little bit. Some of these new rules have impacted how the PPP forgiveness is calculated, and I would not want you to get all the way down the road with forgiveness, maybe even start making payments on a bit of the loan that was left over and then have find out that it's changed. So please consider this. December 31st is not a deadline that's important in the world of PPP. It is one of the dates that the forgiveness application considers when evaluating your FTE uh, number, right, for the number of full-time employee equivalents that you have on staff. So if you're still understaffed and you want to get up to full staff, you think you can't afford to get up to full staff, December 31st would be a good day to do that by. But otherwise, December 31st is not an important date for PPP, and you should take your time and do your application correctly. If you have not yet applied, you're in luck. Some of the new rules will actually be to your benefit. If you have applied and begun making payments, you may be eligible to receive some of those payments back, so stay tuned to that. Also, as we explain how the PPP is calculated. Finally, if my team is doing your PPP forgiveness, please be patient with us. We're going to take a couple of days off for the holidays, and we believe that it's really best if we do not file your forgiveness until the new stimulus rules are firmly in place. So we want to get a good feeling for exactly what those means so that we're not going down the road too far and then having to backtrack. Okay, so part number two, the new rules that affect that impact your old PPP. So number one, no tax. This is the hallelujah moment we've been waiting for when the Congress flat out said that the PPP is not taxable. It told the IRS to go take a hike. And so neither the income nor the expense nor anything else will impact your taxes. You will figure your taxes based on all of your expenses and all of your actual income. The PPP itself is not taxable in any way. So you remember we said that expenses weren't deductible. Now they are. If you tracked that whole thing, you can forget about it. You don't need to know that anymore. Okay. No compound interest. This is really interesting. There's only 1% interest on these loans, but it was compounding over the 2-year term of the loan, or maybe the 5-year term of the loan if you have a 5-year PPP. Congress said that the interest cannot compound. It has to be simple interest, 1% on the balance of the loan each year. Okay. Number three, this one's a really huge one. The EIDL grant, also called the EIDG or the disaster grant, will no longer reduce your PPP forgiveness. Man, I can't tell you how many times I told you the EIDL grant is going to reduce your forgiveness. And so now I finally get to say that is no longer the case. The EIDL grant is free money and the PPP forgiveness is free money, and the two are now completely unrelated. The new stimulus package broke the bond between the disaster loan and the PPP loans, so you don't have to consider your EIDL grant when calculating your forgiveness. Finally, there are some new rules about the what are considered wages for the PPP, and I'll go through those in a second. But if you believe that you are entitled to a larger first PPP than you received, there will be a method for you to reapply and get additional funds for your old PPP. And some of the reasons you would want to do that is if you have retirement benefits or health insurance or even disability and life insurance, vision, dental, all those things that you offer to your employees. That's going to increase your wage base, right? What we can call salaries and wages. And if it increases your wage base, then now you are eligible for a larger PPP, even on the first round. So you may be able to go back and apply for additional. Okay, big third topic here is the brand new second round of PPP loans. We'll be starting soon. We don't have an exact date yet, but Congress has authorized that we will use the same rules as before, plus the rules that I've just explained above, plus the following. You will receive no more than $2 million per company. No publicly traded companies will qualify. So take out all those giant loans that went to all the wrong people before, and this is focused squarely on small businesses. So the company must have no more than 300 employees. That's much smaller than the first round, which was 500. So 300 employees, and you've had at least a 25% reduction in sales quarter over quarter. 25% reduction in top line sales or revenue, if that's what you want to call it. So that says take any quarter in 2020 and compare it to the same quarter in 2019. And if you see a 25% reduction, and who didn't, you will be eligible for a PPP loan. If you have no more than 300 employees and you're not publicly traded, you can apply for up to $2 million PPP loan. This is a brand new second round of PPP loans. So let's just call it the PPP 2021 because we're almost there. So included in that PPP 2021 round 2 will be not just your wage base, but your life insurance, health insurance, dental, vision, disability, and retirement savings. All that will be counted as payroll, and then 2.5 months of that will be, we assume you'll be eligible to receive 2.5 months of that as a loan. All right, there's more good news about the EIDL and disaster loan. I'm going to do that in a separate video, so tune in for the EIDL disaster loan next. Thanks.